Hey, welcome back. It's Jason Walter here. In today's video, I'm going to be breaking down all the information that we have in hand right now that supports the fact that the housing market in the US may be slowing down. Before that, I'm going to provide some information about what has led to this and also stick to the end of this video because I'm going to be sharing my housing market predictions. For those of you who follow the channel, you know that I follow housing market data religiously so I can report that to you. In my opinion, I've been saying this for months now, but skyrocketing home prices is causing affordability issues for housing across America. And this is my number one reason why I feel the housing market could cool off, which frankly is absolutely necessary. So in today's video, I'm going to answer the question, is our US housing market cooling off? And of course, I'm going to support my conclusion with data. Before we get started, if you're new here, then welcome. I post frequent housing market updates so you can make a more informed decision about whether to buy or sell a house. Or if you just want to know what's going on with the housing market in general, then this channel is for you. So please consider subscribing if you haven't done so already and help me reach my goal of reaching 50,000 subscribers by year end. And lastly, if you're looking to buy or sell a house in virtually anywhere in the US, then go to homeandmoney.com/Jason to get connected with a great real estate agent in your neck of the woods. With that said, let's begin today's video. So existing home sales in the US dropped for 4 out of the last 5 months. And new home sales have decreased for 3 months in a row, according to the US Census Bureau. As I reported last month, pending home sales, which of course is a measure of signed contracts between a home buyer and home seller, those rebounded strongly in May, reaching their highest reading for the month of May since 2005. However, pending home sales decreased 1.9% from May to June of this year. Even the chief economist for the National Association of Realtors, which is Lawrence Yun, stated the following. He said, the moderate slowdown in sales is largely due to the huge spike in home prices. Lawrence Yun predicts that mortgage interest rates may increase later this year, which could cool off this hot housing market. In the meantime, CoreLogic reported today that home prices reached their highest levels since 1979. So much so that home prices in the US increased 17% year over year in June. The increase of home prices was fueled by historically low mortgage rates, low housing supply, and a rebounding economy. According to the National Association of Realtors, or NAR, home prices have increased 23% from a year ago, and that was the second highest percentage recorded since January 1999. Mortgage interest rates have fallen greatly since November 2018, and they have more or less been at historically low levels of around 3% for about a year now. Combine that with a historically low amount of houses available for sale, and that's a recipe for home prices to increase greatly. For example, the median sold price in the US has skyrocketed this year. It has hit all-time highs over the last 4 months in a row. But as home prices continue to increase, this causes affordability issues. It reaches a point where simply home buyers quit or they get priced out of their market. According to Lawrence Yun, mortgage interest rates are likely to increase this year and into 2022. With a slight uptick in mortgage rates, he expects home sales to dip. He also said that demand easing and housing starts improving for brand new houses, home sale prices are expected to increase at a slower pace of 4.4% in 2022 compared with 14.1% in 2021. But the big question is, what are we seeing today that shows that home buyer demand is weakening? First of all, mortgage applications for home purchases have been decreasing. So according to the Mortgage Bankers Association, or the MBA, they reported that their purchase index decreased for the second week in a row to its lowest level since May 2020 and has now declined on an annual basis for the past 3 months in a row. Joel Kahn, who's an associate vice president at the MBA, stated the following. Potential buyers continue to be put off by extremely high home prices and increased competition. I have to be honest, it's very challenging for home buyers right now. So for example, about 23% of all sales in the US are being sold to cash buyers compared with only 16% last year. In addition, houses in the US are selling very quickly on average. So the average days on the market, or the average time it takes to sell a house, is only 17 days compared with 24 days from a year ago. This may be why home purchases by investors have increased, yet first-time homebuyer purchases have decreased. A second reason, or second indicator, that shows that our housing market may be slowing down is due to the fact that housing inventory, which of course is the total number of houses listed for sale, across the nation has increased over the last 4 months in a row for existing houses. Housing inventory hasn't been this high since November 2020. In addition, housing inventory for brand new houses has also been increasing. So have a look at this. This is from the US Census Bureau, and they reported here that the number of new houses for sale has increased in 7 out of the last 8 months. In addition, the month supply of brand new houses in the US has reached 6.3 months. What this basically means is that at the current sales pace of brand new houses, all the houses listed for sale right now, all the new houses listed for sale, would be sold in 6.3 months. And keep in mind, a month supply of 4 to 6 months is really indicative of a balanced real estate market. The month supply of brand new houses has increased a whopping 46% compared to 1 year ago. However, as I mentioned in my video from about a week ago, these numbers are a little bit skewed. And this is because a lot of home builders right now are simply pouring concrete for their foundations, but not constructing houses yet. However, even if home builders do this, the US Census Bureau records these as technically houses for sale. A third indicator that may be indicative that our housing market may be slowing down is the fact that home sales have been decreasing. Existing home sales in the US have skyrocketed since June of last year, but sales have dropped for 4 out of the last 5 months, and new home sales have decreased for 3 months in a row. Redfin also recently reported that pending home sales posted their smallest increase in over a year. They said most signs point to a cooling housing market. Pending home sales posted their smallest year-over-year increase since late June of 2020. The supply of homes for sale continued to plateau as the number of new listed houses for sale followed its slow seasonal decline. A fourth indicator that a real estate market may be cooling off is due to the fact that we have preliminary data from the National Association of Realtors that shows that new listings is now outpacing contracts signed. This new report from the National Association of Realtors shows that contract signings, which is when a home seller accepts an offer from a home buyer, those fell by 7.4% from 1 year ago. On the other hand, new listings rose by 2.8%. As you can see here on this graphic, ever since May of 2020, the number of contracts signed has outpaced the number of new listings. In other words, demand has been outpacing supply. But have a look at what happened more recently this year. So in May or June of this year, it shifted as the number of new listings has been higher than the number of contracts signed. This could be a signal that home buyer demand is decreasing. Before I give you my real estate market predictions, a fifth reason why our housing market may be slowing down is due to the fact that we have a decrease of foot traffic for houses listed for sale. For example, showings per house, which reflects the strength of home buyer interest per house listed for sale, decreased 17% year over year. And this decrease of foot traffic is happening across the nation. This is because showings per card decrease year over year for all regions. In the Northeast, it decreased by 43%, the Midwest by 24%, the South by 18%, and in the West, it decreased by 6% year over year. As you guys know, I am not a real estate fortune teller, but here's one possible scenario of what could happen next. Number 1, home prices could decrease in the coming months. In my opinion, this is entirely possible given the fact that housing inventory for existing houses and brand new houses has been increasing. Please keep in mind though that if home prices decrease in the coming months, this is entirely normal, so let me explain. So have a look at this. This is from Redfin for home sale prices. The gray line there at the bottom represents what happened in 2019, which of course was a more normal real estate market. home prices increased from around February through July before declining through October. Obviously, that didn't happen in 2020 as home prices increased until late last year, but I think all of us would agree that 2020 was a complete anomaly. So if we have a more normal real estate market this year, then we may expect home prices to decline into the fall season. My second real estate market prediction, which of course could be entirely wrong, but this is just my opinion, but I believe that as more and more news reports get published that the housing boom is over, this could stoke fear of homeowners who get scared that their home values may decrease. In other words, home sellers get FOMO and they decide to list their houses for sale rather than waiting it out. This in turn could increase housing inventory further, which could put downward pressure on home prices if home buyer demand doesn't increase. Now, don't get me wrong here because I don't want to give you false hope if you're a home buyer, because I'm not currently seeing anything right now that's telling me there's going to be a housing market crash or that home prices are going to be falling greatly. It still remains a strong seller's market on average across the nation, even if the housing market is cooling right now. However, I'll definitely keep you posted as more data becomes available. And of course, this is pure speculation and I could be entirely wrong, but let me know what you guys think. Please comment below. And of course, don't forget to check out that link below if you're thinking about buying or selling a house for virtually anywhere in the US. And also, if you got any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day. Look forward to seeing you on the next video.